Hello, everyone. Today's conversation is with Eke Urum, founder of Nigerian wealth management platform Rise. Thanks for being here, Eke.
Thanks for having me, Emik. I appreciate it.
My pleasure. Now, of course, Rise just announced its acquisition of trading and investment platform Chaka, and that's what I want to talk to you about, right? So, some people in Nigeria are calling it the deal of the week or the deal of the year in Nigeria, and I think there's a lot of lessons there that founders can learn. So, I'm really excited to have you here just to talk a bit about that. But first of all, I think it's actually important to talk about Rise, right? So I think there's a lot of misconceptions. Some folks don't exactly know how Rise is different. So just to give a bit of context, right? So there's a number of trading platforms across Africa, like Trove, Hisa, obviously Rise, Chaka, Thunder in Egypt, Easy Equities in South Africa, right? There's a number of them that are powered specifically by the trading tech platform Drive Wealth, right? But I think, unlike them, and you clarify for me, but I think Rise is the only one that is actually a U.S. SEC registered investment advisor, right? So you guys are able to do some things differently. You provide managed portfolios. You don't let users, pick stocks, individual securities themselves, right? So just
Yes.
for background, for early context, for anybody watching and listening, just how would you say Rise is differentiated from the other players in the space?
Sure. Thanks for that question. So, like you said, first thing is that we are the only ones that have that direct U.S. Regulatory structure where we're a registered investment advisor with the U.S. SEC. That allows us to also take a more advisory managed approach, right? So you don't trade on Rise. We construct different portfolios across different assets. And so a user just puts their money into whichever one they prefer based on either the asset class, their risk level, or whatever they would prefer to invest in. And then they can track the returns on the portfolio while we select, basically what goes into it. And the advantage of that approach is that, first of all, in the long term, it plays out better because you have people who this is their full time job, constructing the portfolios, keeping up with the markets, making sure that you're responding to the best opportunities. And you're not just, trading, because, it's what's popular, what's everyone's talking about, right? But there's still some other people who prefer, to trade by themselves, and they have other products that do that. But the core offering on Rise is that you have experts doing the selection, constructing the portfolios, and managing the portfolios for our users. So it allows you to take a bit more passive approach. And then also we have that direct US connection, direct registration in the US that actually gives us access, direct access to the markets rather than rely on, third parties, which gives us also an advantage in terms of costs. So those are the two main ways that Rise is different.
Got it. And in terms, so I mean, just to clarify, it sounds like those third parties, specifically in our context, is mostly Drive Wealth. So when you have the
Correct.
direct connection, you don't need to rely on a solution like that. Okay, that's clear. And I think the other thing, just to clarify, is in terms of the business model, right, or the revenue model. I've read in the past. I think in the last week in review, the last Afri Digest newsletter, kind of mentioned that your model, the Rise model, is to take generally a 1 to 2% investment management fee, kind of based on assets under management. Whereas the other players in the space obviously are trading driven, so tend to ultimately be some kind of broker commission, transaction fee. Okay,
Right.
perfect.
Right. Yeah. So the only thing I'll correct there is that we started out with the 2%. Now it's actually 0.5% because obviously with a larger base of assets, we can spread our costs, to more users, and so we just need to charge a smaller fee to still be able to make the revenue that we want to achieve. So we've dropped that fee to 0.5% management fee for all users on our platform.
That's fantastic. And it kind of dovetails nicely with this next question, right? So I think part of the reason a lot of people in Nigeria consider this, the deal of the year is kind of the surprise factor. I think a lot of people were kind of surprised or even shocked to kind of hear of Rise acquiring Chaka. And part of that, in my view, is, just a general perception that Chaka was perhaps a larger company. I think Chaka had more staff, right? So just a bigger team. Also had announced, kind of more, had disclosed publicly more funding than you guys had, right? So I think there's a perception that, okay, Chaka are the big guys, Rise is the smaller guys. But it seems like, to your point, your assets under management have ballooned. You guys are kind of doing well. So just how do you respond to the surprise in the market? And, do you think there's like your strategy of kind of offering a managed portfolio is better suited for markets like Nigeria?
I think that both approaches have their advantages. And to the point of funding, so we didn't necessarily disclose, but we've actually raised over $2 million in VC funding. This is the first place that I'm going to confirm that I'll share that information. But I mean, VCs in our space have always known this. We take the approach of keeping our value proposition, I guess, front and center. And so maybe it's not the best that we've not always like announced our raises, but we do have over 2 million in funding from like players across the ecosystem and even from Techstars, right? So we've always been pretty up there in terms of hand in hand with our peers, right? But then the business model, I think that we take, I think yes, it has a lot of advantages because there's more people who are, they're too busy to handle a lot of the work. And in some cases, when you benchmark the performance, you're better off with the managed approach than the self-directed approach. But then there is a core cadre of, very experienced traders, institutional players, and also some individuals who are very market savvy who want to do self-trading. So both approaches are viable. I just think that at least at the scale of where we're at, Rise has an advantage, right? Then the other aspect I would say in terms of the surprise factor is Chaka, at some level, Chaka is bigger than us in terms of the team and where they've been over the last few years. They actually launched slightly ahead of us. But this deal came about partially because the proposition is that both companies having an offering like Chaka is an advantage on both ends. And it also came about because Tosin and I have kind of had a lot of shared conversation over the years. So it made it that when we started thinking about this, we're able to figure out how to close the deal because on both ends, the founders have like a lot of affinity already. And then the advantage that we then had just made it easier to close the deal. But it's not like, maybe like we're like 10 times bigger than Chaka or anything like that. It's just, it was a good deal. It made sense to both parties. And also we were in a position where we could make it happen. That's how this came about.
Perfect. No, let's talk about that a bit more, right? I remember a conversation I had with Edmund, with considering his acquisition, Block's acquisition of I forget Orchestrate, right? The orchestration payment orchestration player,
Yeah.
right? And he was talking about if two founders want to do a deal, then it's done, right? If one founder is kind of forcing another founder, begging another founder, then you might run into problems. So I kind of just want to, dive a bit deeper, with you and Tosin and how the deal, actually came about. So it sounds like I would imagine you guys have watched each other. Were founded, launched around the same time. You just mentioned you talked to each other in the past, and I think in the recent press reports that came out about this deal, it mentioned that kind of one of your investors, in my reading, it sounds like Future Africa, one of your mutual investors kind of said, hey, you guys should talk more and see, if there's something that makes sense in terms of joining forces. So just, in terms of process-wise, just what's the actual, you guys are talking in the past, probably casually, keeping up with what's, how you guys are growing, what's happening in the market. Obviously for the last 12 months or so, there's been a downturn. Just are you thinking about acquisitions before this investor puts kind of that bug in your ear? Is it just, is it opportunistic? Just play us through a bit more how this actually came about,
Sure.
if you will.
Yeah, yeah, yeah. We did have an investor. Can confirm who, but we did have an investor that kind of provided that nudge. So prior to then, I'll be honest, I wasn't really thinking, oh yeah, we're gonna go out and acquire because I've never done one before, right? And so you just don't think that, oh, maybe this would be even viable or interesting or whatever the case may be, or maybe even affordable. Like I didn't know the mechanics of it. And so when you've never done something before, you just don't think about it in a certain way. But when they mentioned it as an, it'll be good if, both of you were in one umbrella because there's the need for scale on this end, on Chaka's end, which, you know, because of our license, would be easier, right? If they were under our umbrella to then make it easier to scale. And then on our end, there was this two things. One is there was always that interest because some users keep requesting like self-directed options, and we actually send them to other products. Like, hey, these are the products that do this, right? Again, because we believe it's collaborative. We're trying to build an opportunity space, and these are the guys that handle self trading. But we're always wondering: is this something we should do later, or is this something we should think about how to partner with? So it was a gap in our offering. And then for us also, we started to think, and I know a lot of people might not appreciate it now, but some of the changes that are kind of happening in the Nigerian macroeconomic space, they are setting up some opportunities locally, right? There's some interesting opportunities shaping up locally that just need, like, we need inflation to come down. We need certain things to drop before you start to see those opportunities become incredibly viable. But for those of us who kind of like keep an eye on markets and to identify opportunities, I started to think we need to increase our exposure to the local market, right? We need to figure out how to increase our exposure to the local market, and we need to figure out how to close this gap in our trading, in our self-trading options. So when the investor mentioned, it was like, this might make sense, right? So I asked him a few questions, like, so if we're trying to do a deal like this, how do we make it happen? We're still early stage. We're not like acquiring like with tons of money. How do we make something like this happen? And what's the threshold of what can be done? And he was like, you know what? Let me ask Tosin to reach out to you so that you guys can talk. So when Tosin then reached out to me, we kind of like talked about it, kind of ran it over multiple scenarios, and we realized that they wanted the scale factor just as much as we wanted the local exposure and trading factor, right? It's like, so there was something each side wanted, and it just became a matter of how do we then work out the economics of it, right? So we were, look, this is our position, this is what we can do, this is what you guys are thinking about, and these are the constraints on both ends. And so we kind of got both investors on both sides talked about what we're trying to achieve, try to get their support, try to work out the economics, try to make sure we figure, so the more we talked about it, took a lot of back and forth, and that happened over several months before we then even got the lawyers involved, right? So when we got the lawyers involved was now, we kind of already had some sense of a deal, and they just needed to formalize it. And again, as we're doing that, so DD started, the more we went through each step of the process, we're like, oh yeah, it made better and better sense. And that culminated ultimately in closing. So that's how it came together.
Got it. And just, I guess, to clarify or dive deeper on the economics. So it sounds like, and the reason is because I think a lot of these conversations are happening right now, right? But to your point, for a lot of people, it's their first time, right? So a lot of people don't even know how it works, how it should work. So just with you here, I feel like it's a great opportunity to understand a bit more. So just on the economic side, just a lot of that is, okay, you guys are around the same size. There's a downturn. Past valuations aren't really what matters anymore. The reality is what matters, right? So just how do you come together to say this, this is what makes sense. It sounds like obviously you and Tosin are at the forefront. It sounds like, there's a halo of investors that are supporting. And then later, when it's all figured out, you obviously have the lawyers. But I guess the first question is, in terms of that valuation, were there any outside advisors? I don't mean you guys or the investors, but like formal, did you guys rely on any kind of bankers, accountants, valuation professionals, etc.?
So we basically, each person had like an indicative value. So on our end, we got advice from someone, basically valuation advice. How do you value the two relative companies? I can't actually speak to what happened on their end because, when we made the proposition, I think there was a few adjustments here and there, but basically it was acceptable, right? But yeah, we did get advice, just deal advice. We handle some of it internally, right? We didn't start from zero because again, we have a deal team that we analyze valuations for external companies. So, what's the relative revenue, what's the quality of earnings, what's the relative size, AUM, try to get the initial answers, and then we brought in someone to kind of like give us what, in your opinion, what would be like a fair valuation, relative valuation for these, right? And then we then figured out how do we combine it. Obviously, it's a combination of cash and then stock, right? So but once you have the relative valuation, it's now about, okay, what do we now put the offer as? So how much cash, how much stock, what are how do you construct it so that everyone is happy, including their own investors. Those are the things we work. Obviously, I can't disclose specifics, but generally speaking, we got that advice on our end, and then when we put a deal on the table, with some adjustments, it was accepted. So I'm not sure if they had advice on their end, but we did
Got
on
it.
our.
Again, that's great, and that's kind of what I'm getting at. You mentioned kind of the back and forth at the end. Once the general framework is agreed to, just the fine tuning. So I'm curious, just as a whole, right? I don't, it's rare that processes like these are smooth sailing 100%. So just from your point of view, what were there any sticking points that really put the deal in jeopardy once you guys had agreed that this is something you want to do?
Yeah, I wouldn't call them sticking points. I think they were just, part of the details to figure out.
Yeah,
So there was some details that we had to understand from how to balance some people on their cap table and, make sure that, the deal was okay with them. There was a bit of back and forth there. Again, most of the investors on both ends were very supportive and also very, they looked at the deal terms, they went back and forth, but generally speaking, once it made sense, they didn't give us as much. There are some deals that I've seen where a lot of the hassles came from maybe investors on either side, but that wasn't the case on this, right? So, but there was a little bit of back and forth. It's like, okay, here's how we're thinking about it. What are you guys saying on this? And the other point that we kind of went back and forth a little bit more is also so most founders, you have your vesting schedule, you have like a way. So again, this deal, one of the founders of Chaka is staying on, which is Tosin. The other founder, Bo, is not, right? So and we try to figure out how do we make sure that we align the incentives. So post acquisition, how are we making sure that, if Bo is staying, how do we compensate? If Tosin is staying, how do we compensate? If Bo is not, how do we make sure that he's also like getting a fairly equivalent deal, but recognizing the fact that he's not? There was some back and forth on that end as well. I think the transition points that we're now dealing with, which again, like you said, it's not always smooth. There's a lot of moving parts. So now what we're thinking about is, so Chaka has a lot of wonderful people, and we're trying to make sure that we can keep, if not everyone, at least as many as possible, because they are the ones that have the brains and the context of driving this business, while we are more on the learning side. And so, because post acquisition, both companies are still kind of running separately, right? It's not like we're not absorbing it into a unit of Rise. It's still Chaka as a company. It's just that now the ownership structure is now shared. So we have the same parent companies, but each individual company is on its own standing, which means that you need to retain all that context. You need to make sure that you are now working hand in hand, but with like breaking down the communication friction so that the both companies can work in sync, but still retain each of them still retain their own individual. You get each one has a product roadmap. Each one has like a slightly different target audience. So you want to make sure that each company is still positioned to continue to deliver value to the people that are using each one without kind of getting distracted. So there's a lot of moving parts there. We've had multiple meetings with the team, and we're gradually we're developing that context, because the goal is then once we have this context clear, we then know, okay, this is the best way to scale this product. This is the best way to add the new offerings or make changes. But you want to make sure that when you're making those changes, the people making them are the people who have had all that context from the beginning. So that's another thing that we're currently working through. And I've talked to several people who have done acquisitions now, and I've asked them questions because I'm trying to like compare our experience with theirs. And yeah, they're like, yeah, it takes time, it takes a few months, but generally speaking, I think it's proceeding well.
No, that's fantastic. It's very interesting. Look, I think one of the things that's interesting, you kind of touched upon it, was these are, post acquisition, aside from the ownership, the cap table, these are, effectively two different companies, right? So
Hmm.
Shaka still has its, its user base. Rise still has its user base. The products are, for now independent, with the caveat of what we mentioned, right? You guys getting a
Hmm.
bit more access to, some of that self investing, and then Shaka having a bit more, being able to leverage the licenses. But I mean, I'm just curious, I think for a lot of people would call it ego, call it whatever you want, right? If it's an
Hmm.
acquisition and not a merger, why isn't Shaka turning into Rise stocks? Right? Why isn't it being rebranded, and brought under the Rise umbrella from a marketing branding perspective? So, how did you think about that?
So the first thing is that we want to be careful how we make changes, right? You have to respect users. You have to respect the user experience. I think that any serious product person or any serious business person will understand that you have to really put the user experience at the forefront, which means change. You don't make changes just because you want to, or just because you feel like it, or even because it helps your business. The first question is, how does this help our users, right? So that's why we're not just jumping in and making that change. And it's also important to kind of keep the ego out of it, right? The users they're the kings and queens of the show. They are the ones we're here to serve. So we want to make sure that they at least get all the questions out, understand all the things that have changed, even before we start to make any new changes. That's the first step. The second step is that, so for instance, our head of marketing, she shared some material with me. We're having conversations about what's the best way to manage this on the long-term basis. But I think that it's primarily a function of, all right, what is the key value proposition on both sides? It's not about just, oh yeah, it's good to have Rise in front of everything, and maybe that will be helpful over in the long run. But in the immediate term, it's if we keep this as Chaka, what is in the brand? What is the equity that the brand has built? What does it represent to its users? And what does it mean to the value proposition or the roadmap of this product, right? And if all of that still is better as Chaka, then the brand belongs to us now. So even if you have two separate brands, it's like Facebook and Instagram, right? So Facebook owns Instagram, but if you called Instagram like Facebook Moments, it takes away something, right?
Yeah.
It takes away something. So you want to understand. the user journey, understand the value proposition, the brand proposition, and then make sure that if you decide to change, it's because that's an improvement, right? Not because you just want to put Rise as far as possible. It might be better for most users if they think, okay, when I think of self-trading, let me think of Chaka. When I think of a managed investment, let me think of Rise. But ultimately, it's not a question that I alone am answering. So if Tosin's in that conversation, and then our head of marketing is in that conversation, we're talking to the users on both ends to also understand how they're thinking about it. And when we understand all the moving parts, we can then say, oh yeah, it's either A or B. But it shouldn't be a conversation about what we feel good about. It's always about the users.
Got it. That's great. And I think, so you guys are now kind of serving the same user base, I think, regionally, right? Users in Nigeria. But one thing that caught my eye in some media reports is kind of the ambition or the aspiration to now move outside of Nigeria, right? Both,
Right.
I think, across the continent and also international, outside of Africa completely, right? If I'm not mistaken. So just want to give you the opportunity there. How are you guys thinking about that?
Sure. Yeah. So the way we're thinking about it is, listen, we've seen there's two ways. First of all, we do have a U.S. registration, right? That means that we can build for more than just Nigeria, and so if we can, then why don't we, right? The second is we've seen a lot of Nigerians move to other countries. I think that's even the more immediate need for thinking beyond Nigeria, because we've seen a lot of users that are now in the UK, that are now in Canada, that are now in the US, that are in Europe, and they're saying, hey, we love Rise, we love what you guys are doing. Some of them, we want to still be able to invest in the Nigerian stock market through Chaka, but the product is not designed to make that experience easy for them. So we need to, as a matter of serving our users, we need to kind of make it easy for them to use us wherever they are. And so that's like the more immediate sense. And then the next one is then why don't we take advantage of the opportunities in front of us? Because what we are offering, access to dollar investments, democratizing access to stock markets, both locally and U.S. stock market, it's not something that is wanted only in Nigeria, right? So right now we're now asking ourselves, where else do they want this? Because we know that we can provide it. So once we figure out where else we want it and how we can get there, we can then figure, okay, so what are the resources that gets us there? But absolutely, users can expect an easier experience for people in the diaspora, whether Nigerians or other African countries who want to trade in local markets, to be able to, also want to use Rise from wherever they are. They should expect an easier experience, something that is tailored to wherever they physically are right now. And then secondly, we want to then increase the space of where we are serving. The people that we're taking this mission to, or this value proposition to, will increase. The third aspect is now that people are trading on Chaka's side, people are trading in the Nigerian market and the US markets, but there are other markets out there that people want access to. Sometimes Europe is where there's great opportunities. Sometimes people in the diaspora want access not just to the Nigerian market, but also to the Kenyan market, maybe to the South African market. Maybe people are thinking about India and China, Hong Kong. So there's a lot of markets out there that we can provide access to. And so over the next 12 months, that will be the forefront of our position, will be how do we help diaspora users use both of these products more easily and be able to participate in the local markets and also in our core propositions. Two, how do we extend our value proposition to other markets where they may be needed but are currently not being served? And then finally, how do we give our existing users access to other jurisdictions that they're interested in getting into, still with the same core product that they already love? So those are the three ways that we're thinking about internationalizing. And honestly, to me, it's like the biggest point of excitement, because when you think about it, then you realize that, more markets is good for existing users. And then us being exposed to other jurisdictions then also means more users, the opportunity to get access or give our value proposition to more people, and then you achieve more scale. And starting from the beginning of where I said that scale is good because it allows you to spread your costs to more people, which also then translates to an improved value proposition for existing users. So that's why I think it's a win all around.
So the other thing I wanted to talk to you is really that obviously, this acquisition is happening in kind of in an environment where there's a downturn, where there's a lot of layoffs, where there's down rounds, capital is scarce, etc. So, and obviously, the end user is experiencing price increases, inflation, and so forth, right? So, not a lot of money to invest, whether it's in managed investments, whether it's self-directed investments, etc., right? So, I'm just curious, just how is the current market environment, affecting your business? And then at a broader level, how did it actually affect the urgency or the desire to do this deal from either your side or Chaka's side?
Right. So I think that from a macro perspective, I think that a lot of the issues that you pointed out, the inflation challenges, in some level, it's affecting the willingness and ability to invest. But in another level, right, for people who already have some capital that are watching those capital lose value, it's actually increasing the impetus to invest the way we described, right? So because part of our job is with dollar investments, it's also to help protect from that inflation, right? So on the dollar side, for instance, inflation has really been brought under control, right? It's not completely solved, but it's been brought under control. And so the demand for dollar assets is actually increasing because of the same, macro situation, right? And because we're also starting from a relatively lower base. There's a lot of capital out there that is still looking for opportunities like what we offer, and so that has helped a lot. Even though yes, it's still we also know that the users are feeling the impact of the current situation. I think that on the trading side, I think that that's where the downturn has been a lot more pronounced. Because so on Rise, I think it's important to point out that we don't have just equities, right? So we have equities, we have fixed income, we have real estate, all in USD, and they have more stable returns, which can help even in situations like this. But equities, because of the downturn, there's less trading. I mean, it's improved now, but there was that period when very few people wanted to touch the stock markets, right? Because there was a downturn across the board, and if you're not someone that is really very savvy to know where the opportunities are, most people were losing money, right? So I think that has affected more of the self-directed trading market, which I'm sure definitely made it easier to do a deal like this because then you're coming in on the Rise where there's a more diverse offering set. There's more opportunities to say, okay, if you're not doing too much of stocks trading at the moment, there's other things you could do. So it contributed to making it the right move at the right time for the trading side. But the demand is still there. Another thing is that, like you said before, some of those issues are more pronounced in Nigeria, but when you expand beyond the shores of Nigeria, you're tapping into people who maybe have more stability, but are also still interested in dollar assets and the U.S. stock market, and so that demand is still there to harvest, right? So I think that's part of the reason why being able to go international, which is again something that being on the Rise could help with. It positions us really well to tap into the markets where there's more stability, but there's still demand for U.S. assets. And so those are the places that we're going to try to go, right? So that means in summary, it's a bit of a mixed bag, right? So there's some issues on this end, but there's still opportunities on this end, right? And I think the last thing I'll say on that is also that for us, investing is a long game, right? And we even our users on Rise, we tell them it's a marathon. There will always be periods of downturn. There will always be periods of like things bouncing back up and booming, right? But you're better able to. So for us now, because we have multiple diverse assets, we're looking at, in fact, even yesterday, we're still looking at new opportunities that are coming up the horizon. It allows us to wait out the craziness on the, let's say, for instance, on the Nigerian stock market, because we know, when you look at our numbers, when you look at the market, we know that the Nigerian stock market is going to experience a boom. We don't know exactly when that will happen, but we know that the best way to be ready for it is to be here, concentrate on the other offerings that we now have, or that Chaka now has as part of Rise, and also position the product so that when that boom then starts happening, we're ready for people to come in and continue trading. So, every business will go through these cycles, and you just need to be structured in a way that you can ride them. And I absolutely think we are.
Got it. No, that's super helpful. And I guess to that point about the cycles, right? Myself and I think other analysts, other people who think about and talk about, tech in Africa are really, expecting there to be a rise of, of acquisitions, right? As people kind of come together in this period to kind of be stronger to face kind of a period of challenges. So just what's your view on that? Is it from conversations you're having, from your experience? Is it that do you expect a similar kind of wave uptick of M&A right now?
I think obviously, I mean, we just did one, right? So that clearly tells you that we're not the only, the same patterns that made this deal possible. I'm sure other people are seeing it in their own context, and so definitely would see more deals happen. I rely on people like you in terms of giving me a better read of what's going on across the ecosystem, because in all honesty, and I don't know if that's a good or bad thing, but there's a bit of a kind of like a tunnel vision where I'm
Of
looking
course.
at, yeah, pretty much our business and how we are responding to the environment. My assumption is that other people are doing the same thing. So the kind of conclusions that we're coming to, I'm sure that they're coming to as well. So I wouldn't be surprised to see more M&A deals. But yeah, I do also think that for investors that recognize good business, you know that what comes after this is that the the companies that are able to navigate periods like this then turn out to be more resilient, because the structure then makes them able to weather. So I remember when we started, we had some investors who said, "Hey, why are you putting stocks and real estate and fixed income in the same product, and it's a bit more complex. You need to just focus on one." And this was back in 2019, 2020. And our response to that is that we know from our own expertise and experience that markets go through cycles, and at any given time, there's always an asset that is profiting from the downturn on another side. There are assets that, for real estate, for instance, it's the one of the best hedges for, when there's massive economic downturn, because the demand for housing is one of the most stable demands there is, economically speaking, right? So you want to have these diverse offerings because they help protect you no matter what the market is doing, and it makes for a more resilient kind of business, right? So that has paid off for us as Rise today. And I think that as more companies go through this period, they will come out with similar advantages, because they will then be more structured for different downturns or different scenarios, right? So that means that investors who recognize that moment and are able to then support these companies would also reap the benefits once the things kind of get back on an upward trajectory. You're going to see the people are going to start coming to the table to do deals, but the time to do those deals is probably around now, right? So, but yeah, those are my thoughts in terms of where the market is overall.
Got it. And in terms of the timing to do those deals is now. What advice would you give to early stage founders, potentially inexperienced, who are inexperienced at M&A, right?
Mhm.
About doing these kind of deals now, whether that's like you or like Rise on the acquiring side, or whether that's like on the target side. Just what from your experience, what's important, what should people keep in mind, and what should they ultimately look out for.
To be honest, I don't know if I'm qualified to advise. Just
You just went through it.
I mean, yeah. I've gone through it, and I just don't know that, out of one experience. So there are people who have been doing M&As for a while, and I go to them for advice.
Yeah.
So I would say, yeah, there is one advice I can say. Oh, find people who've done this many times, right? And ask them all the questions going in, right? And the second thing is maybe you know, have great investors. But those are like, I don't know if this, because the investors helped me see that this was possible, right? And it's not something that comes with just, so there are people that maybe you take money from someone because they have money to give you because you're thinking that what you need from an investor is just money. But I always tell my people that the most important thing investors can give you is context, right? The money is the second most important thing, and it's definitely critical for the business. But you want to have investors who have some, they've experienced a lot of things, and they can kind of, and it's also the art because a lot of people are like, oh, why raise from, VCs? And not every VC is great, but the good ones are the ones that can really help you see what's ahead of you, and then tell you, hey, you need to be moving in this direction, right? So I think those are the two things I can say. Have investors who have the experience and can provide context for how to build, and that's more important than just money. And then the second thing is find people who have done these deals before. Just ask them a lot of questions so that they'll tell you there are several things that you might not think is possible that absolutely is possible if the right person tells you how to go about it. And then as far as like for advice for me on like actual like it's like I'm going through one, so I can't give advice on that. Let's complete the transition. Let's see how the combined entities actually fulfill the expectations that we have. And then I can say, okay, yeah, now I can give advice on this particular transactions.
No, that's very fair. And I think just the last question before I let you go, huh? I know you mentioned you couldn't say much, but I have to do my job and ask you. All right. So this acquisition is not disclosed in terms of the total price, and also in terms of the kind of consideration, right? So you mentioned, I know now it's a mix of, stock and cash, right? From an outside perspective, just analyzing, it clearly has to be, majority stock, right? That's what makes sense from the position of the companies involved. So, just what can you say about the stock and equity and cash split? And what can you say about the range, maybe, if not the actual figure for the deal? What range are we talking about here?
I cannot say anything. You're an analyst and a good one. So I'll let you analyze, what makes sense, but I really cannot. And it's not because if I say that it either hurts or enhances. But when we raised, we didn't announce the raises, right?
Yeah.
But we do have like strong investors that I think have backed our company. So we just generally, because I realize that when you put these things, they lead to a lot of speculation, and they kind of distract from the goal, right? The goal is that two companies that started off with similar missions but were kind of working independently decided to come together and then work together to improve the offering to investors, to users, and also to make it easier to extend that value proposition, beyond where we currently are. And so you're getting like really strong, really strong teams to then double their efforts at like advancing the mission of helping Africans invest better, helping Africans get access to stock markets locally and globally, helping them get better investment management, helping them get dollar investments, that will hopefully over the next few years become the best way to build wealth, and help people to, over the years as they are working to slowly, consistently increase their financial position. And that's where we want people to focus on. We want people to focus on what these two companies coming together represent for users and for the market, and how we can then combine efforts to move the mission forward. And I realized that when you kind of like that's actually the real reason why Rise doesn't typically talk about, we raise this amount, or it's like we want people when they hear about Rise to focus on what can Rise do for me, what can these companies as a whole, what can they offer, and how do they help me achieve the financial goals that I want. And so, in a space where there's a lot of speculation, I've experienced, what's that speculative. It becomes a whole thing, and we don't like those distractions. So that's why, we just kind of like rather not put out numbers or say specifics. But yeah, that's all I can say.
No, that's clear. It makes a lot of sense, right? So it's a strongly or B2C led business, right, where there's a lot of potential value being created. So that resonates with me. And look, I want to thank you for your time. I think it's a really fascinating conversation. Thank you for the opportunity to learn a bit more about about Rise, first of all, about Chaka and the model in the space, and then about kind of what to expect as you guys come together. So I wish you a successful integration. Looking forward to what the combined Chaka Rise does in the future, both in Nigeria, outside of Nigeria on the continent, and across the world. So thank you again, Ike.
I appreciate that. Thank you so much. This was a pleasure. Thank you.